Good afternoon. You're watching us. Ministers take charge, and now we have Hardeep Singh Puri taking charge as the Minister for Petroleum and Natural Gas. Continuity is, the flavor of the moment right now, even as we had all the announcements of key ministries take place last evening. And there you can see, apart from all the ministers' visuals that we've been getting you since morning, Hardeep Singh Puri takes charge as the Minister for Petroleum and Natural Gas. Continuity is something that the street is liking as well, and as a result of which we had a bunch of brokerage notes this morning as well that came in on the oil and gas space. ONGC, in fact, is the top Nifty gainer on the back of Jefferies believing that continuity should be good for the profitability for all these oil and energy space companies. So that's some visuals coming for you.
Yes, absolutely. So remember that the Prime Minister has retained the likes of Amit Shah, Rajnath Singh, Nirmala Sitharaman and S. Jaishankar in charge of the 4 high-profile ministries. There will be these, these visuals coming through the day as the cabinet ministers do take up their portfolios, and we'll keep getting you visuals. But as of now, we need to track all of the headlines as well as the top stories that we're tracking and the market. So first up, stocks gain with mid-caps leading the charge after Modi 3.0 maintains status quo on key ministerial portfolios, industrials and realty and prominent gainers, while financials, FMCG and IT are laggards.
Indigo slips nearly 2% of its equity, most likely being sold by Interglobe Enterprises. A bunch of large trades, in fact, Honasa, Consumer as well as IRB Infra 2 skid on big trades that likely saw private investors offload their shares.
The Cabinet approves the expansion of the PM Awas Yojana to build 3 crore more affordable homes in rural and urban centres. The move is seen providing a fillip to cement and home material demand.
New NDA government signals policy continuity with its senior leaders continuing to occupy key ministerial berths in finance, home affairs, defence, commerce, railways and road transport as well as petroleum. We just saw visuals coming in from Hardeep Puri. This even as recent moves signal greater attention to jobs and rural growth.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu. Well, today is turning out to be a session where we are seeing the mid-caps do better. So we have the mid-cap index, which is up around 1% at this point in time. And the Nifty just about higher with a little bit of a positive bias, similar to what we saw in yesterday's trading session. So no decisive moves which have come in as of now. So we have the Nifty, which is at around 23,325. Remember, record highs in any case. So it's okay to just about bide some amount of time. In terms of specific stocks, that seems to be where the action is. So ONGC, like Mangalam mentioned just a couple of minutes ago, that's your top gain on the Nifty, up around 3.6%. We have L&T, which is up around 2.2%, and Hero Moto, which is up around 1.7%, Britannia, Apollo Hospitals, all of these stocks which are in the green, all of them from different sectors. So you are seeing buying across the board. On the downside, a couple of stocks such as Dr. Reddy's, Asian Paints, Kotak Mahindra Bank, BPCL are sulking a bit. So there are losses ranging anywhere between 0.7 to a little over 1% for a couple of these counters. Otherwise, advanced decline ratio is in the green for the second day running. That's an important parameter to track. So that stands at around 2:1 on the Bombay Stock Exchange.
Yes, Ekta, 2:1 on the Bombay Stock Exchange. If you look at the broader markets, in the NSE as well, it's close to around 1,700 stocks advancing for 650 stocks which are declining. But just one point, on a lot of these stocks which are rallying because of continuity of portfolios, some of them are actually also rallying because of some new appointments that have come in. And this is with regards to GMR Airports. That stock is up around 6.5%. It's doubled over the last 12 months or so. And there's a very interesting story way back in 2000 when, Chandrababu Naidu was the chief minister of then Andhra Pradesh, the unsplit Andhra Pradesh. He had actually, signed an MOU with the Airports Authority of India and GMR to bring the first of these modern airports that we have in the city, as it were, to Hyderabad, and then construction began. The Hyderabad airport was on in 2008. Many years later, Chandrababu Naidu was back in power in Telangana, and there is a promise of an airport in Amravati. So that's benefiting the stock. And more importantly, yesterday, the cabinet announcement that came in, we have Mr. Ram Mohan Naidu, who has been appointed as the Minister of Civil Aviation from the TDP. So all these factors working in maybe in favor of GMR Airports as well.
Yes, absolutely. And as you can see, that stock has surged around 118% just in the past 1 year. So that's the kind of market that we're in, where a lot of these stocks are getting rewarded and seeing incremental buying for stocks which have already gained. In fact, another example of that would be Interglobe Aviation, which has gained over 50% this year, and it's rallied significantly. And it has been seeing incremental buying coming through. Maybe Interglobe should come up for you. It's down today, but nonetheless, it was up in yesterday's trading session, already rallied over 50% this year. But that's on a couple of specific stocks. We're going to keep getting you visuals of all of the cabinet ministers being sworn in, but maybe we can get to a couple of stocks in focus. Home First Finance is in focus following a bullish note by Investec. And Abhishek is here to tell us more about this. Abhishek.
Well, Investec has written on Home First Finance, wherein they have a buy recommendation and a target price of 1,200 per share. They say that Home First Finance AUM has crossed the 10,000 crore level with an ROE of 15% plus, and they have one of the best asset quality in class. So, focus of annual report of 2024 of Home First Finance is on preparation of the next leg of growth. They say that adding 3 new states to the existing 6 states would augur well for Home First Finance. So 6 existing states were Gujarat, Maharashtra, Tamil Nadu, Andhra Pradesh, as well as Telangana and Karnataka. And now they are eyeing growth in states of Uttar Pradesh, MP, that is Madhya Pradesh, as well as Rajasthan. So they believe that Home First Finance is the most scalable, affordable HFC player, and ROE has crossed 15% and is likely to cross 18% level by FY26. So they expect AUM growth at a solid CAGR of 29% plus over the next few years, or between FY24 to 27. So they see 3 catalysts which would actually act in FY25. Since the AUM has crossed the 10,000 crore level, there is chances of a rating upgrade which can come in, and they believe that affordable housing scheme from the government would also augur well for Home First Finance, and additional fee income from the insurance cross-sell also provides opportunity for them to make a better PNL or stronger PNL. Back to you.
All right, Abhishek, thanks a lot for that. That's a 9% up move that we're seeing on Home First Finance. Investec looking at the stock positively as well, with a target price of almost 1,200 rupees. Meanwhile, we have some footage coming in from the North Block. Amit Shah has reached the North Block to take charge as the Home Minister. So we've been getting pictures and videos of ministers taking charge. Now we have the Home Minister Amit Shah taking charge once again after the last term and the term before that as well. So continuity is again the flavor of the day.
Yes, absolutely. And remember that Amit Shah, largely Mangalam has been credited widely for the BJP's phenomenal growth. His role in terms of leading the party in 2014, 2019 elections. He's been the Home Minister in the previous term as well. So that, like you mentioned, continuity does matter. And I think we'll keep getting you visuals of Amit Shah as well as other cabinet ministers, reaching and taking over those portfolios. But let's move on now. Tata Chemicals is buzzing in trade after a Centrum report has indicated that the demand for soda ash is rising, and global supply conditions could result in Tata Chemicals raising prices of soda ash, a key component. Sonal is here with the details on this.
Oh yes, because we have seen in the past, actually it's been months and months, that Tata Chemicals has gone ahead and only cut soda ash prices because of oversupply, because of demand issues as well. The news now is that American National Soda Ash Corporation, or ANSAC, they've gone ahead and increased soda ash prices in the US from 1st of July by $25 per ton. It might look like a small amount, but it has come in after months of cuts in soda ash prices. This is all non-contract sales of soda ash and on contracted sales when contracts allow them to do so. The ANSAC president also says that they are seeing a tightening of the global soda ash supply environment, leading to an increase in demand for their soda ash. Now, what this means is that maybe the other players, including Tata Chemicals, could go ahead and increase soda ash prices, especially in the US market, which has been facing a lot of pressure in terms of demand and pricing. Tata Chemicals was a member of ANSAC, but they withdrew only from December 2022. But if ANSAC is increasing, there is a possibility that Tata Chemicals could also go ahead and increase prices. Now, Centrum says that this is positive for US national soda ash prices because they were languishing due to new Chinese synthetic capacities coming by. Also some demand pressures in Europe, also about the fact that Turkey was the new place from where there was a lot of dumping for soda ash as well. So all of this could be taken care of maybe from here on, and there is a possibility that soda ash prices, at least in the US, will see an increase which could be positive for soda ash prices globally.
All right, that explains the up move that we're seeing on Tata Chem from, being a supply glut to a demand outstripping supply, and perhaps prices of soda ash increasing. So commodity companies typically at the turn of a cycle start to see big moves, and we've seen a near 4% recovery from the lows as well. But it's been a day of a lot of large trades. We had the large trade coming in from Interglobe Aviation, Honasa, IRB. Vivek joins in to give us a roundup of what was sold at what price and how much. Vivek.
Well, that's right. So Interglobe Aviation, IRB Infra, and the other one that you mentioned was Honasa. Now, all three of these, we had intimated you last evening and also today early morning that these deals were likely, and all of these stocks are under pressure, all for various reasons. Now, first one, let's look at Interglobe Aviations. So far, it's actually been the Gangwal family that's been exiting or paring down its stake along the lines that they had. They have been intimating the exchanges about. But today, surprisingly, it's Interglobe Enterprises, the current promoter, the ones that are actually running the airline currently, that has gone ahead and paid close to 2% of the total stake that they held. They held 37.7% stake at the end of the June quarter. The total size of the deal today was close to 3,294 crores at the lower end of the price band. The next one was IRB Infra. Remember, IRB Infra, just 2 weeks ago, you actually saw the promoter entity selling close to 2% stake. Today, what's happened is one of the strategic private equity investors called Sintra, which is an affiliate of an Italian company, Ferrovial, has sold 5% stake in the company. They held 24.86% stake at the end of Q4 or at the end of FY24. So now bringing it below the 20% mark, the total deal size was in excess of 1,900 crore. And lastly, Honasa Consumer, here too, two strategic investors, Fireside Ventures and Sofina Ventures, that held 5.3% stake and 6.16% stake in the company at the end of Q4 respectively. Both of them appear to have paid 1% each in today's block deal. The total size of the block deal at the lower end of the price band is in excess of 270 crores. All three of these stocks under pressure after the large blocks that have happened.
Okay, all right. Thanks very much for that, Vivek. Well, we need to take a short break with the news that the Bank Nifty is absolutely flat at this point in time. Take a break, but lots more queries on the other side. We'll also put the focus on Jubilant Food. Stay tuned.
Welcome back. It's a 1% up move that we're seeing for the mid-cap index, 530 points. The Nifty holding with gains of about 70 points, even as the Nifty bank is underperforming, currently sitting just above the green line. But one of the stocks which has been doing well today is Jubilant Foodworks. It's actually seen a rally of almost 20-25% from its 52-week low, currently holding with a gain of a little over 1%. Why is the stock in focus? Because it's an important moment. Domino's India has opened its 2,000th store yesterday. And why is 2,000 store a big deal? Because, Domino's is actually the only QSR in the country, Ekta, national or MNC, to reach this 2,000 landmark. India has the highest number of Domino's outlets in a country outside of the US. And the pace of expansion, as you can see, has, increased drastically. It first opened its store in 1996. So the first store to 500 stores took them 16 years. Then from 500 to store 1,000 took them 4 years. Thereafter, there was a pandemic and all these things in the middle. So the 1,000 to 1,500 store took about 6 years. And the last 500 stores from 1,500 to 2,000 took about 2 years itself. So the pace of stores or store expansion is only increasing. Add to that, the company said they will add about 180 stores of Domino's in FY25. They target 10% Domino's store additions every year with 3 to 4% like-for-like growth, implying 14% revenue growth. They see medium-term potential for 4,000 Domino's stores in the country, and 70% of their sales nearly come via delivery, on which they've promised, 20-minute delivery and improving the metrics on that as well. So all these factors working for them over and above them having exposure to DP Eurasia as well as Popeyes and Hongs, the new verticals that they are seeding as well. So this was our Insight Edge segment, and we got some insights from the management of the company. Sameer Khetarpal, the MD and CEO of Jubilant Foodworks, spoke to us exclusively this morning.
Domino's has about 20,000 stores worldwide, and India is about 2,000. We are the largest single location outside of US. It's a big opportunity, right? That's how I see it. We are still scratching the surface. Who would have imagined 29 years ago we will be 2,000 stores and India will be the largest market outside of US in terms of number of stores for Domino's worldwide. I do believe the potential in India, the growth rate, rising consumption, and how Domino's have innovated for customers on value, delivery, great taste we are going to grow. I'm very confident of it. Last 3 quarters, we've seen positive like-for-like growth for delivery, and therefore it's a worldwide trend that is that we are witnessing, where delivery salience is going up. Customers are going lesser inside the stores to dine in, specifically for QSRs, and therefore we double down on delivery to add more fuel into, or more money into customer wallets to expand. So that is what is really happening over here. I think the momentum continues this quarter for sure for us. And on delivery, we also launched specifically 99 rupees offerings for dine-in customers. That has, we believe, will arrest the decline in dine-in. Again, it is about great functional experience, value. So I'm quite positive delivery like-for-like will be positive throughout the year.
Okay, so that's Jubilant Food. That stock is up around 1.2%. Rapid expansion in terms of stores there. But the big story that we're tracking is all of the cabinet ministers taking charge. And now we have visuals of Prahlad Joshi taking charge as the new and renewable energy minister. So those are some visuals which are coming through on your screen. We'll keep getting you more updates with regards to that. But let's focus on one particular aspect of the policy continuity. We have Ashwini Vaishnav, who has taken charge as the Railway Minister in the NDA 3.0 cabinet, to talk more about the hopes of continuity in railway orders and how the sector is expected to perform under the coalition government. We did speak to Amish Chaudhary, who's the Vice Chairman and MD of Titagarh Rail Systems. Listen in to what he had to say earlier to us.
It was very important that this momentum that has picked up in the railways continues. And with the current railway minister, Mr. Vaishnav, continuing to be the minister, industry is extremely buoyant and very happy that this momentum is likely to not only continue but to accelerate. If we look at the railways, what they have done is they have come up with different versions of Vande Bharat. So there is a Vande Sadharan, there is a Vande Bharat, there is a Vande Bharat sleeper that we are doing. There is a Vande Bharat chair car which is already running. So the Vande Metro is been announced. So number of variants of the Vande categories. Margin will move to about 10-11% with both the segments without propulsion being manufactured by us. And we believe by FY26 and 27, we would be able to make all the propulsion or most of the propulsion required in-house, which will then improve our margin to about 15%. So between last year and this year, we'll be spending about 1,000 crores, and that is already on stream.
All right, since we're speaking about continuity, let's talk about Hardeep Singh Puri. He is taking charge as Minister of Petroleum and Natural Gas. He is addressing the media.
Different challenges rising out of the security situation in some parts of the world close to a home, some Russia, Ukraine. Amidst all those challenges, we have performed rather well on availability, affordability and sustainability. There has not been any crisis or any shortfall of availability either in respect of petrol or diesel. Why I will have to request you to either leave the room or put off your phones. And this in spite of very strong roadblocks that were created. And you will agree, India is the only country in the world where in the last 2 or 3 years prices have actually come down. Why do I say that? If you look at the prices of crude oil, on which we are dependent 85% for our imports, we don't determine international prices. International prices are determined by the producing countries and the equilibrium or the lack of it of demand and supply. Prices during the economic lockdown came down to what, $19.56. And then they rose to what, $128 or even beyond that. There were major disruptions in sources of supply, but we were able to navigate that successfully. And today we are in the situation where, in spite of all those challenges, prices in India at the retail outlet, especially in BJP ruled states, have come down and are amongst the lowest in the world in comparable situation. In our immediate neighborhood, during the crisis, prices went up by as much as 70 to 80%. We have one neighbor on our west where they have to close the electricity at 8 p.m. because there is no energy. We have assisted other countries in South Asia during this crisis. But put all that aside, availability was there even during torrential rains in the northeast. My colleagues in the PSUs, some of them carried gas cylinders on their shoulders in order to ensure supply. Affordability, I've already mentioned to you. Now the sustainability, again, I will come to that in a few minutes. But overall situation is that during this period, the oil and gas PSUs have done well. Their share, or rather before I come to share in the contribution to the global Indian GDP, I think they made 1,59,000 crores as profit after tax. 1,59,000 crores profit after tax, which in terms of contribution to the revenue would be around how much? You're an old finance ministry hand. 19-20% of overall revenue came from the oil and gas PSUs. My emphasis as we embark on our next phase is to concentrate on exploration and production, green hydrogen, and what goes with green hydrogen, refinery and petchem, ethanol, and the gas sector. So what I propose to do is to give you very brief bullet points on what our current thinking is. There is an essential continuity of what we have done in the last 3 years, but we will build on what we have done in the last 3 years in order to be able to achieve those results. On E&P, which is my primary focus area, rounds 9 and 10 of the OALP bidding round will be done in the next few weeks. Now, I've asked my colleagues, and we mean that seriously, next few weeks. Few can be 2, 3, but it cannot be more than that. It can be a little more, but not much more. Oil production from the 98/2 well will increase to 45,000 barrels per day very soon, and gas production will also start soon. From the western offshore, ONGC has already floated a tender to get an international technology partner. All international oil and gas majors having an annual revenue above $75 billion have been invited to participate in the international tender. I'll repeat, all international oil and gas majors with an annual revenue of over $75 billion have been invited to participate in the tender. Now you come to green hydrogen, which is one of my favorite areas. And I know many of you share that passion also, along with biofuels. The first green hydrogen plant, 10 megawatts, was commissioned on 27th May 2024, even whilst the elections were over. Now, clearly, because of the code of conduct, we could not make a major thing on it, but I think it's a great achievement. We did not allow the somewhat extended electoral process to interfere in our work, which meant that MOS and I could not be there on that happy occasion to participate in the inauguration. Of course, at that stage, we didn't even know whether we will be in this ministry or not. But now what I can say is that it's a very big milestone to have a 10 megawatt plant commissioned. Many of our oil PSUs are in the process of issuance of tender to supply green hydrogen. Green hydrogen station at Kochi has been commissioned for bus plying from Kochi airport. And one of my talking points in the last few interactions with you has been that we are the first country in the world to employ green hydrogen buses. And I'm very happy to inform you that 15 of these buses are now plying, 11 in Delhi and 4 in Vadodara. So that again, now somebody will turn around and say, ask me what is the viability. You know, when you are at this stage of pioneering, starting a new project, you want to demonstrate that. And as we get into green hydrogen more, the cost will also keep coming down. But I think it's a very good start. I was frankly hoping to do this, but I couldn't talk in the last, how many days was the electoral process? 85 days or so. So 85 days ago, we were hoping to get it done. It was done. Today, I can tell you that 11 of them are applying in Delhi and 4 there. 1 in Kochi also. 2. Not yet. No, I'm not as BPCL. Who is this going to do it? That's what I'm saying. Please encourage. Now you have a minister also from Kerala, so the green hydrogen refinery, Panipat, 10 KTA, Mathura 5 KTA, and Paradeep refinery of 10 KTA plants will be installed by IOC soon. Would you like to tell us something about it, or?
I think after you.
After, okay, good. Refinery and Petchem, BPCL is in an advanced state to set up greenfield refineries, and GAIL is also planning an ethane cracker unit for petrochemicals.
Right, day one, and coming out with announcements and all guns blazing out there. The once again appointed minister in charge for oil and gas, and saying that exploration, production will be the key primary focus area. Will build more on what they've done over the last 3 years, with an added focus on green hydrogen as well. There are 15 green hydrogen buses which are already plying, and that number will be increased as well. There would be a green hydrogen refinery installed by the IOC, and BPCL 2 is in advanced stages to set up greenfield refineries. So sets the course for this space. Continuity with added acceleration towards development are the first line of comments that have been coming from all the ministers who've taken charge so far.
Yes, absolutely. And I think, Mangalam, what you mentioned with regards to what the oil and gas minister was saying, specifically, stock specifically, he did talk about ONGC and that, the tender that they floated, and they have called upon international oil and gas majors with a revenue of around $75 billion to probably come and bid for that international tender. So that would be our international tie-up with ONGC. So that would be an important aspect to take note of, considering that ONGC in fact is the top gainer on the Nifty this afternoon. But nonetheless, that's on the entire oil and gas space, and that's going to be the big theme that we're following today. In fact, we do have Fitch, which will be coming on board in the later part of the show to talk more about what we can expect from the third term of the government. But as of now, Mangalam, I wanted your thoughts on what you're tracking in the F&O space.
Well, in the F&O space, Ekta, it's a Tuesday, so it's Nifty weekly options expiry. That's something that I'm looking at closely. For the Nifty itself, consolidation is the order of the day, and that's because we are seeing some weakness in the Nifty Bank. The Nifty Bank has not managed to hold above 50,000, at least 4 or 5 occasions, in the last 1 week or so when it's crossed past that 50,000 mark. It's closed above 50,000 only once, and that's something that we'll have to keep an eye out on. The mid caps continue to do well, so no problems out there. The portfolios feel a lot better today. And the other thing that's really, standing out is the big decline that we're seeing in India Wix. Remember the big build-up that we saw in the India Wix ahead of the election-related events, etc., went all the way up to 27, 28 as well. But from there, it's nearly halved, the 15 level on the Wix with an 8% decline today. What the India Wix decline does is it, speaks about a range-bound trade on the frontline indices. Why is that? Because a lot of people write both calls and puts. So once prices of calls and puts keep coming down as more people are writing them because they expect the market to be in the range, the implied volatility also, or the IV as we know it, decreases, and that reflects in the India Wix. What is the range that the street is playing for? 23,400 call on the Nifty, very active. 23,500 call on the Nifty, equally active as well. So on the way up, 23,500 to 23,550 seems like a bit of a congestion zone, and on the way down 23,300 put, and we have the 23,300 200 put, both of them equally active as well. So the street is believing that there could be some support around that 23,200 mark, and on the way up resistance around 23,500 itself. Fin Nifty, we were talking about that. The 22,200 call, most active, has the most amount of open interest as well. But some punt buying taking place in the 22,250 call as well, telling you maybe there could be a bit of an up move towards the second half of trade. And at the lower level, 22,100 put equally active, so telling you there is support around that level too. Stocks, a lot of long positions added on Oberoi Realty. And second one is the GMR Airport stock that we've been talking about since morning. It's a 6% up move that we're seeing. But also what's moving higher is the open interest, and now it's above 95% of the market-wide position limits, telling you it might enter F&O ban. So one must be a little cautious here.
Okay, all right. Thanks very much for that. We'll take a short break, but up next, we'll be talking technicals. Dharmesh Shah will be joining in. Welcome back. Some more visuals coming in of Amit Shah taking charge as the Home Minister. Remember that he held that portfolio in the previous term as well. So that is Amit Shah. Those are some visuals coming in, him taking charge as Home Minister. Well, we'll keep getting visuals through and through as they come through. But as of now, let's concentrate on one particular topic, which is to do with the elections. According to Fitch, the outcome of the recent election is expected to support broad policy continuity, with the government continuing to prioritize infra, capital expenditure, improvements to the business environment, and gradual fiscal consolidation. However, coalition politics and a weakened mandate could make passing legislation more challenging. The post-election budget is in July and is expected to provide greater clarity on economic reform priorities and fiscal plans. We have with us Jeremy Zook, who's the Director, Asia Pacific Sovereign Fitch Ratings, joining in now. Jeremy, hi, welcome to the show. Well, it's been a couple of days now since, the election mandate. Give us a sense in terms of what you think the priorities would be for the new government, especially when it comes to infra and capital expenditure.
Yeah, thanks, Akta, and thanks for having me on this afternoon. So I think at the risk of being quite repetitive to what has been mentioned earlier in this program is that this next administration is all about policy continuity. And I think, certainly the appointments in terms of the ministerial portfolios kind of signal that policy continuity is quite important. We do see some new faces, of course, but there are a lot of old hands coming back to manage their portfolios. And importantly, in the finance portfolio, the finance minister is returning. So I think, this sends a signal that, again, these core economic priorities that the Modi government had in previous administrations will continue. And that's really around this CapEx push that we've seen become quite important for the government over the past several years. And a continued emphasis on helping to push through ease of doing business measures and trying to improve India's competitiveness through reducing regulation. And then around fiscal consolidation, we do expect the government will continue to try to achieve its fiscal targets and reach that 4.5% fiscal deficit that it's had set for several years now. And so that's kind of our expectation. And I think that's a lot of what we've seen with the government's announcements so far. Now, of course, this government will be very different than past governments in that the BJP no longer has a sole majority. And so that does mean a little more jockeying amongst coalition partners and a little more negotiation that could make it a bit more challenging around some of the more contentious reforms on land, labor, and agriculture. But I think for the most part, that CapEx push, importantly, will be sustained. And we think that that's an important factor behind some of the strong growth momentum that we've seen recently. And so we expect that to continue.
All right, so continuity is the order of the day with accelerated focus on what was taking place in the previous term, only to increase in the next term as well. Jeremy, but you did mention there were a few new faces. What have your readings around them been, and what are your expectations from those ministries?
Well, I think, again, we'll have to see, I think, in the coming weeks, coming months, where the government goes in terms of its priorities. You know, this is, while it is the same NDA government, again, because the coalition partners are playing a more important role, I think some of the priorities may shift modestly, I think. But I think, you know, we'll see in the July budget document where a lot of the policy priorities go and how aggressive the government decides to be in terms of pursuing its reform agenda and fiscal consolidation over the next 5 years. So I think for us, that's quite an important marker to watch in terms of where we go from here.
What, according to you, would be the shift in those priorities? I mean, what kind of priority shifts are you seeing, even though modestly? All right. I mean, we'll come to you. We'll come to you, Jeremy. I apologize. We also have visuals coming in from Mr. JP Nadda take charge as the minister. So obviously, we have been looking at these ministers taking charge, and JP Nadda obviously has taken charge as Minister for Chemicals and Fertilizers. So there you have it.
Yes, absolutely. But go ahead, Mangalam, you had a question for him.
It was just a follow-up. He said that there could be some modest shifts. Where do you see that happen, and what could be the nature of those shifts?
I think one area to watch for, I think, is on the fiscal front. So while I mentioned that CapEx will be quite important to the government, and we think that will be sustained, there may be a bit more, I suppose, jockeying around fiscal spending, especially as the government is set, in our view, to continue on its gradual consolidation path. And so as consolidation continues, that does make some trade-offs around spending a little more challenging, and maintaining high CapEx does come at a cost of other social spending priorities, and so there could begin to be some shifts around that. Again, it's not necessarily our expectation that would occur, but I think that is a potential risk when you do have a coalition government in place.
Well, Jeremy, based on what you're saying about the coalition politics, negotiation is going to become tougher. Do you think that eventually those tough reforms are going to see the light of day? Is that what is Fitch factoring in when it comes to the passing of those reforms?
So when we look at our medium-term growth outlook for India, we expect growth to remain quite robust. So we're forecasting 7% growth in the current fiscal year. And forecasting that will remain quite strong at about 6.5 next year and about 6.2 over the medium term. And in that medium-term growth outlook, we don't factor in any explicit reform measures by the government. That growth outlook really reflects just the strong underlying momentum in the Indian economy, the fact that that bank and corporate balance sheets seem quite healthy at the moment, and again around that capex drive. So when it comes to reforms and some of the contentious reforms, in the last government, we did see efforts to pass agricultural reforms and labor reforms. The agricultural reforms were withdrawn, and the labor reforms are still making their way through at the state level. So a lot of these reforms are very contentious, and it wasn't our base case that they would be passed in this coming term. But I think if they were to pass, that would give some upside to India's already strong growth outlook. And when we think about a lot of these reforms, I mean, these are concurrent reforms, and so state governments are also taking a lead in pursuing land and labor reforms that I think are just very fundamental towards improving India's economic competitiveness globally.
Jeremy, if you could just briefly tell us, Fitch's outlook on India is BBB minus with a stable outlook as of Jan 2024. What would change this, to say a positive outlook or the rating as a whole?
We have seen some positive trends in India's credit metrics over the past several years, certainly on the growth and the external fronts. Where we still see a bit of a constraint is when it comes to public finances. So going back and talking about the strong growth outlook, that will support just a continued improvement in some of the fundamental structural credit metrics around GDP per capita, around India's share in global GDP that we do factor into the ratings. External finances are continue to be very healthy and have helped India to navigate a lot of these shocks. But when we look at fiscal policy, while we have seen, a continued fiscal consolidation, and we have seen a growing commitment to this gradual consolidation path by the government, if we compare India's government debt and fiscal deficit metrics to rating peers, they are on the elevated side relative to those other sovereigns. And so I think, in terms of looking at what could drive a positive rating action, we're paying quite a lot of attention to this fiscal consolidation path, especially what happened.
Right. Apologies. We'll have to keep that short because we are consistently getting pictures. And this one is, of course, Annapurna Devi Yadav, who takes charge as the Minister for Women and Child Development. She is an elected member of Parliament from Kodarma, Jharkhand, where she won the election from, and replacing Smriti Irani's, succeeding Smriti Irani. She was the Women and Child Development Minister earlier, and now it is Annapurna Devi taking charge. We'll take a short break, come back, get you more on the markets and a lot of stock-specific action. We've been talking about, ministers taking charge. One of the youngest ministers in the NDA 3.0 is, the cabinet is K. Ramamohan Naidu, who is the new civil aviation minister from the TDP. Let's listen into what he had to say on his appointment.
फुल फ्लजली जस्टिस करने के लिए मैं बहुत उत्साहित हूँ। इसका स्कोप जिस तरह से कल मोदी जी से भी बातचीत हुई थी तो उन्होंने भी इंकरेज किया था कि यंगस्टर्स को इस फील्ड की बहुत ज़्यादा ज़रूरत है और ये इंटरनेशनल लेवल पे भारत का गौरव और गवर्नमेंट का गौरव ये सब कुछ जुड़ा हुआ है, तो इसको बहुत इम्पॉर्टेंट उसके साथ आगे बढ़ाने के लिए उन्होंने भी इंकरेज किया, एक मिशन मोड में काम करने का डायरेक्शन भी हमें दिया। और जैसे NDA 1 NDA 2 में एक प्रोग्रेस था इसमें और उसको थोड़ा बढ़ावा देते हुए वो कंटिन्यूटी को हम आगे रखेंगे और परसों हम चार्ज भी लेंगे इस मंत्रालय का, तो उसके बाद थोड़ा रिव्यू मीटिंग रखकर आगे का प्लान करेंगे। मोदी जी का एक वो है कि एक सिस्टम उन्होंने बनाया, 100 दिन का एक प्लान बनाओ, फिर उसके बाद आगे का भी 5 साल का भी 10 साल का भी जिस डायरेक्शन में जाना है उसका भी प्लान बनाओ, तो उसके हिसाब से हम काम करेंगे। एविएशन में एक आज के दौरान आप देखिए तो पहले तो होता था एक रिच मैन्स व्हीकल की तरह होता था हवाई का जो ट्रैवल है, पर अभी मध्य स्तर के लोग और थोड़े people from the lower and also they are also able to travel through air, तो उनको ये जो सुविधा है हवाई ट्रैवल की तो उसको और बेहतर बनाने की, उनको और करीब लाने की कोशिश ज़रूर मैं करना चाहूँगा।
All right, making airline and air travel accessible for everyone. That is the youngest Minister of Civil Aviation, the youngest cabinet minister this time around, K. Ramamohan Naidu. Manisha, 36 years old. That's his age, and he is the minister. Speaking about that, we have you with us as well, speaking about all the commodities.
Right. Well, not 36 anymore, but yeah, I'll talk about the crude oil price.
In your heart, 18.
Forever. Nevertheless, Peter McQuire, CEO at Exim Australia, now joins us. Peter, how old are you?
I'm 36 as well, the same age as you, Malika.
All right. No, not old at all. Peter, all right. I'll talk about the crude oil prices now, where we have seen prices actually jump up quite strongly in last 24 hours. I mean, the markets right now are waiting for the US FOMC meeting. The two-day meeting starts today, and then you have the US inflation data coming in tomorrow as well. But Peter, when it comes to crude oil prices, apart from all of this macro, it is also about various statements that we have seen come out in sense of demand expectation, deficit expectations as well for the third quarter. And that is what would you say that the markets are pricing in right now?
Absolutely, Manisha. I think that's so much to drive. I mean, it was sold down heavily. I think after that meeting in June too, as far as OPEC plus. And yes, we're worried about that moving forward. It's going to be a gradual rollout from October to next September of 2025. And then the issue, quite simply, is there going to be enough production out there with hot demand coming over summer? So, yeah, I think I wouldn't be surprised to have another leg up from here. We'll just have to wait and see. But it's certainly very strong considering where we were last Wednesday to where we are today.
Most of the reports seem to be suggesting that crude prices perhaps will trade within that 75, 78 to 92, 95 mark on the higher side for this quarter and the next as well. As Exim Australia view, what is your sense, or what is the range that you're putting out?
I think that's pretty right. I mean, you can't, when you've got to factor in geopolitical concerns and what we've seen wiped out over the last 6 or 8 months, when it builds and then it gets wiped out. So it's hard to speculate, but there's certainly some heat in the market from a geopolitical stance, where certainly, as you just mentioned, from demand and from supply. And then the other side, of course, is, Manisha, where the US dollar trades, interest rates coming off in some of the big economies like Eurozone, but there's no talk of that yet for the Fed. So the US dollar seems to be uptick, and I think it's going to be a wild and woolly ride over the next quarter. And probably early 90s down to around about 80, and it's going to be whipsawing unless you see something dramatic happen from a geopolitical front. All weather.
Peter, also, the strength in US dollar that you talked about seems to be weighing on metals right now. So industrial metals are trading slightly weak, and the precious metals definitely have come off the kind of highs that we saw in this year. So any top trade that you see within this space?
Well, gold got crushed, and so did silver. They were sold off heavily in Manisha in the last few days. And of course, when you're looking at copper, aluminium, tin, all of that got pushed down hard over the last week or two. So I think that they'll take a little bit of the wind is out of their sails, but they'll come back. There's no doubting that. We've just got to see how it all moves. But if geopolitics takes off and other concerns, I feel as though gold, its best days are going to be in the second half of the year and not the first half. Manisha, and silver will go for that role as well.
All right. So roller coaster ride, of course, are there, but buying on dips is still a strategy for many of those precious metal prices. Peter, with that, thank you as always for joining in and making sense of all those price moves that we've seen in commodity markets. But with that, it's a wrap on Halftime Report. Business Nudge will take all the action forward.